Hello everyone, welcome back to Stock Market Meridian. Today is 27th August 2026 and you're watching today's pre-market report. Let's begin with the global markets. Starting with the US markets, yesterday the Dow Jones Index closed in the negative zone, while the remaining major indices ended broadly in neutral territory. However, currently US index futures are trading in the positive zone. And the biggest story from the US market was NVIDIA's latest earnings. NVIDIA delivered another record-breaking quarter, with revenue surging to $96.2 billion, more than doubling year-on-year and beating expectations of around $92.5 billion. Adjusted EPS also came in strong at $2.22, above the expected $2.09. However, despite these impressive numbers, NVIDIA shares fell around 1% in extended trading. The reason? NVIDIA's next quarter revenue guidance of around $108 billion was above the average estimate, but below some of the market's most aggressive expectations of more than $110 billion. CEO Jensen Huang also highlighted strong AI demand while pointing to supply constraints and increasing competition from custom AI chips. NVIDIA has also confirmed that its next-generation Vera Rubin architecture is now in full production. So, the key takeaway is simple. NVIDIA's AI business remains extremely strong, but investor expectations are now so high that even record results are facing intense scrutiny, and that could keep technology and semiconductor stocks in focus globally today. Now, moving to European markets. Yesterday, only the FTSE 100 index closed in the red, while the remaining major European indices ended the session in positive territory. Now, let's look at the Asian markets. Japan, China and South Korea markets have opened with a strong gap up. This is an encouraging signal for the start of the Asian trading session. So, the overall global setup is pointing toward a neutral to slightly positive sentiment for Indian markets. Now, let's move to the commodities market because crude oil and precious metals are also showing important moves. US WTI crude oil is currently trading around $80 to $82 per barrel. Meanwhile, Brent crude is trading near $87 to $89 per barrel. Yesterday, Indian crude oil futures ended approximately 0.7% higher. Natural gas futures also gained around 2.6%. Now, coming to the precious metals. Indian gold futures declined by more than 2% yesterday. Silver futures also remained under pressure, closing around 1.8% lower. Now, let's check ADR data. And there is one clear warning sign for the IT sector. Yesterday, only Reliance Industries ADR managed to close in positive territory. The remaining ADRs, including ICICI Bank, Dr. Reddy's Laboratories, HDFC Bank, Wipro and Infosys, closed in the negative. The biggest pressure was visible in IT. Wipro ADR declined around 2.6%, while Infosys ADR fell nearly 2.9%. That kind of weakness suggests a cautious sentiment toward Indian IT stocks ahead of today's session. So, ADRs are giving us a mixed to negative signal, with IT stocks particularly worth watching. Now, here comes a more encouraging signal: institutional flows. For the third consecutive session, FIIs remained net buyers. Yesterday, FIIs bought 502 crore rupees, while DIIs recorded a massive net buying of 6,425 crore rupees. This is an important cushion for the domestic market. So, despite global uncertainties and sector-specific weakness, strong DII participation continues to provide support to Indian equities. Now, let's move to the economic calendar, because global data could decide the market mood. Yesterday, the US core PCE inflation data and GDP data were largely in line with market expectations and previous levels. At the same time, US crude oil inventories declined sharply, compared with both expectations and the previous reading. Today, the key data point to watch is US initial jobless claims. And tomorrow, attention shifts toward India, with industrial production data and foreign exchange reserve data scheduled for release. So keep an eye on these numbers, because they could influence both global sentiment and the Indian market. Now, coming to the geopolitical updates. According to the latest reports, Iran and Oman have finalized an agreement covering shipping management and revenue sharing through the Strait of Hormuz. The two countries have also discussed a temporary navigation corridor and plans for clearing naval mines from the waterway. But there is an important catch. The strait is not fully reopening yet. Iran's Islamic Revolutionary Guard Corps has clarified that a full reopening remains conditional on the United States accepting Iran's terms. Vessel traffic through the strait has already been severely disrupted, keeping energy and commodity transportation below normal levels. And on the other side, Washington is continuing to increase economic pressure on Tehran. US President Donald Trump has said that both economic and military measures are effective and that the US is not in a hurry to negotiate an end to the conflict. The US State Department has also confirmed further actions targeting Tehran's financial channels, including areas such as aviation, maritime shipping, technology, gold, and digital assets. Interestingly, despite the geopolitical tension, global crude oil prices have declined for the third consecutive day as markets react to the possibility of discussions between Iran and Oman. However, Iran's Deputy Foreign Minister Kazim Gharibabadi has reiterated that the Strait of Hormuz remains closed and that Washington must meet certain commitments before a full reopening can happen. Meanwhile, Qatar's Prime Minister and Foreign Minister Sheikh Mohammed bin Abdul Rahman bin Jassim Al Thani is scheduled to travel to Tehran for high-level talks. So, the next few days could be extremely important for oil prices, global inflation expectations, and risk sentiment. Now, let's move to the company-specific updates because several important announcements have come out after the previous market session. Let's start with HDFC Bank, where a significant legal development has emerged in the US. According to reports, a federal securities class action lawsuit has been filed in the US District Court for the Southern District of New York against HDFC Bank, CEO Shashidhar Jagdishan and CFO Srinivasan Vaidyanathan. The lawsuit alleges that the bank used a mechanism to provide higher interest payouts on government deposits by allegedly disguising around 45 crore rupees as marketing expenditure. The case relates to deposits associated with the Maharashtra State Road Development Corporation, with the complaint alleging that a higher interest rate was offered and that funds were routed through third-party vendors. The plaintiffs are investors who purchased HDFC Bank's US-traded securities between July 17, 2023 and May 26, 2026. The lawsuit also alleges that the bank's regulatory disclosures and internal financial controls were materially misrepresented. Importantly, these are allegations contained in the lawsuit and not established findings of wrongdoing. HDFC Bank ADRs were trading around 1% lower at $23.43 in the US following the emergence of the lawsuit details. So this is an important stock-specific development to watch closely. Next, there is positive news for Steel Authority of India, or SAIL. The company is rolling out an immediate steel price increase of around 1,000 rupees per metric ton, and another increase of approximately 1,500 rupees per metric ton or 1.50 rupees per kilogram is planned from September 1. Other major steel producers are also reportedly communicating similar price increases. The reason? Strong domestic demand. Both primary and secondary steel markets are witnessing upward price momentum, while the TMT rebar market is expected to remain firm. For steel producers, higher realizations could help offset input cost pressure and support margins as the post-monsoon construction season approaches. So SAIL and other steel stocks could remain in focus. Now, an update we discussed in yesterday's post-market report, but it is important enough to repeat. ICICI Prudential Life Insurance is set for a promoter stake sale today. Promoter Prudential Corporation Holdings Limited plans to sell up to 2% of the company's equity, equivalent to approximately 98.85 lakh shares through the open market route. The transaction is being undertaken to meet SEBI's minimum public shareholding requirements. After completion, promoter and promoter group holding is expected to decline from 87.60% to 85.60%. One important point, ICICI Bank and its group entities will not participate in the open market purchase today. So investors should closely monitor the stock for any impact from the supply of shares in the market. Now, moving to Bharat Electronics or BEL, and this is another strong order flow update. BEL has secured additional orders worth approximately 730 crore rupees since its previous disclosure on August 10. The orders cover a wide range of products, including radars, avionics, communication equipment, tank systems, electro-optics, cybersecurity, perimeter security, EVMs, medical electronics, jammers, batteries, and maintenance services. Including the earlier 541 crore rupees order, BEL's August order inflows have already crossed approximately 1,271 crore rupees. And the company's order book stood at around 72,248 crore rupees as of July 1. BEL is also targeting FY27 order inflows of more than 55,000 crore rupees. So, continued order wins are strengthening BEL's revenue visibility and long-term growth story. Next, let's look at Geo Financial Services, which is rapidly moving from the foundation building stage toward large-scale operations. Gross AUM crossed 30,667 crore rupees in Q1 FY27, supported by quarterly disbursements of 11,252 crore rupees. Mutual fund AUM reached around 21,737 crore rupees with more than 1.2 million retail investors. Customer deposits increased 72% year-on-year to 617 crore rupees, while CASA users reached approximately 3.9 million. Payment volumes also surged, with total payment value jumping 2.5 times to 19,248 crore rupees. And the Geo Finance app has crossed 25 million unique users. The company is also expanding into insurance, wealth management, and securities broking. A major development is the proposed partnership where Bank of America could acquire up to a 49.9% stake in Geo Credit Limited. So, Geo Financial is increasingly becoming a broader financial services platform rather than just a lending business. Next, Mankind Pharma is restructuring its subsidiary structure to bring the Bharat Serums business directly under the parent company. The boards of Mankind Pharma and BSVL have approved initiating voluntary liquidation under the Insolvency and Bankruptcy Code. Mankind currently holds 96% of BSVL, while its wholly owned subsidiary Appian Properties holds the remaining 4%. The operating business of BSVL will be transferred to Mankind Pharma on a going concern basis. The move is expected to simplify the corporate structure, improve treasury management, and reduce administrative and compliance costs. It also brings Mankind's distribution network together with Bharat Serum's specialized portfolio in areas such as women's health, critical care, and biologicals. Importantly, there will be no change in the shareholding pattern of Mankind Pharma. So, this is primarily a corporate simplification and operational integration exercise. Now, an important clarification from KIMS Hospitals. The company has strongly denied media reports suggesting that it is in talks to acquire a stake in Renova Hospitals for around $52 million. KIMS stated that the report is false, baseless, and factually incorrect. The company clarified that it has not entered into any agreement or MOU and has not held discussions as alleged in the report. Management has asked investors and market participants to disregard the speculation. So, for KIMS shareholders, the key takeaway is simple. The reported Renova Hospitals acquisition is not a confirmed transaction. Now, here is an interesting development from NITCO. The company has partnered with the House of Abhinandan Lodha or Hoabal to co-develop a 40-acre land parcel in ALIBAUG, Maharashtra. The project is expected to generate approximately 4,500 crores in total revenue over 5 years. NITCO's estimated revenue share is around 1,500 crores. The project is planned as a premium mixed-use development featuring luxury apartments, townhouses, lifestyle amenities, and hospitality spaces, including a dedicated boutique hotel. The development will be carried out in phases, subject to approvals and definitive agreements. So, NITCO is looking to turn its land assets into a significant long-term revenue opportunity. Next, TITAGARH Rail Systems is looking beyond India. The company has signed a non-binding MOU with Siemens to explore international metro rolling stock opportunities across global markets. The partnership aims to combine TITAGARH's cost-effective manufacturing capabilities with Siemens' expertise in traction, propulsion, and train control systems. The companies will evaluate opportunities on a case-by-case basis while using India as a competitive manufacturing and export base. This could strengthen TITAGARH's presence in overseas metro markets and support its strategic shift toward higher-margin passenger rolling stock. So, this partnership could open another important growth avenue for TITAGARH Rail. And finally, let's talk about the EV space, where JSW MG Motor India is exploring a major move. The company is evaluating an electric vehicle in the 10 to 15 lakh rupee price range. That is important because this segment is currently dominated by models such as Tata Motors Punch EV. JSW MG Motor is already among India's leading EV players, with the MG Windsor contributing significantly to its current volumes. The company is also preparing for new launches, including the planned Hector Tomahawk EV, while expanding manufacturing capacity at its Gujarat plant. The long-term ambition is to scale production capacity toward 1 million vehicles. The company is also targeting around 70% domestic component localization for the Windsor and Hector Tomahawk by the end of 2027. So, if MG successfully enters the mass market EV segment, competition in India's affordable EV space could become even more intense. So that's the complete setup for today's market. If you found this pre-market report helpful, don't forget to like, share and subscribe to Stock Market Meridian. And I'll see you again this evening with today's post-market report. Thank you for watching. Signing off. Jai Hind.